Welcome to Talk Tickers. We're here to cut through the noise of earnings calls and get straight to the signal.
And today we're doing a deep dive into Tower Semiconductor, specifically their first quarter 2025 financial results call. We've gone through the transcript for you.
All right, let's jump right in then. The headlines for Q1 2025. Tower reported revenue of $358 million.
Yep, $358 million. And the bottom line, net profit landed at $40 million for the quarter.
That revenue number, $358 million, that's actually a decent step up year over year, right, compared to Q1 24.
It is about 9% growth versus Q1 last year. Solid.
Okay. But the net profit, $40 million, that's slightly down from the $45 million in Q1 24.
Right. And they gave a couple of reasons for that dip. First, they started booking these accelerated fixed costs for their fabs back in Q4 24. Basically, costs hitting the books earlier as they gear up.
Ah, okay. Prep work.
Exactly. And second, they had a one-off tax benefit in Q1 last year that, well, didn't happen again this quarter. So those two things explain the difference.
Got it. And per share.
Basic earnings were 36 cents. Diluted was 35 cents for Q1 25.
And looking ahead just slightly, Q2 guidance.
They put the midpoint for Q2 revenue at around $372 million, plus or minus 5%, the usual range. So yeah, they're expecting things to tick up sequentially.
Okay, that's the snapshot. But the really interesting part, I thought, was the full year outlook. They seem pretty firm on hitting their year-over-year growth targets for 2025.
They did. They reaffirmed those targets. And the plan, as they laid it out, is for sequential revenue increases, quarter by quarter, building through the year.
With a big acceleration expected when? Second half.
Yes, exactly. They're banking on a strong acceleration in the second half. And that's tied directly to all those capacity investments they've been making across multiple fabs.
Right. The idea being those investments move past qualification and really start ramping into actual production volume later this year.
Precisely. That's the core thesis for the H2 acceleration.
Now, looking at the Q1 revenue mix, there were some pretty big shifts compared to last year. RF infrastructure, for instance.
Oh, yeah, that was striking. RF infra jumped from, what was it, 14% of revenue in Q1 24?
To 22% in Q1 25.
Right. And that's, on a higher overall revenue base, too. So the actual dollar increase was quite substantial.
Definitely. And power management also saw a big jump.
It did. Power climbed from 10% to 18% of their total revenue year over year. They said a lot of that was driven by gaining share in a totally new market for them.
Okay, let's maybe unpack some of those growth engines they talked about. That RF infrastructure piece seems key.
Absolutely. It's being heavily driven by, well, no surprise, data centers and AI expansion.
And Tower's angle there is Silicon Photonics, SIFO, and Silicon Germanium, SIDGE.
You got it. SIFO is basically merging light with silicon for super fast data transfer. Think optical interconnects. And SIDGE adds germanium, lets chips handle much higher frequencies. Both are critical for that AI backbone.
And how are their technologies doing specifically?
Record revenue for both SIFO and SIDGE in Q1 25.
Yeah.
That's what they reported. And they expect strong sequential growth to continue for both throughout this year.
They mentioned SIFO is actually kicking out older tech, EML, at 800 gigs.
Yeah, displacing traditional EML at 800G.
Yeah.
And they're already ramping production for the next step, 1.6 terabits per second. That uses 8 channels at 200 gigs each.
Wow. The market growth forecasts there must be pretty huge.
Oh, they are. They cited forecasts, I think, close to a 50% compound annual growth rate, TGR, for the 800G at 1.6T optical transceiver market over the next 5 years.
50% CAGR, that's massive. Seems like Tower's right in the sweet spot.
It certainly looks that way. And they're investing in the next generation, too, like tech, to reduce the number of external lasers needed, which cuts costs. They also mentioned hitting a 400 gigabit per lane milestone with their partner OpenLight on 8-inch wafers.
Paving the way for even faster stuff, 3.2T maybe?
Potentially, yeah. And SIDGE is benefiting from the same trends used in things like TIAs and drivers for those optical modules. Longer term, they see SIDGE maybe moving into satellite receivers, low-noise amps and phones.
And they feel pretty good about their market position in SIFO.
Very good. They estimated something like 80% market share, serving 4 of the top 5 optical integrators, and actually being the sole source for 4 of those customers.
Okay, strong position there. Let's shift gears to power management. What's happening there?
They mentioned a solid rebound in their high-voltage 200-millimeter platforms. That's stuff for automotive, industrial, consumer markets.
And the 300-millimeter side, BCD, right?
Right, 300-millimeter BCD. That's seeing continued strong growth. And it's mainly driven by a new business line for them, envelope tracker tech, for high-end smartphones.
Envelope tracker. What does that actually do for my phone?
It's pretty clever, actually. It dynamically adjusts the power going to the phone's power amplifier, working with the main chip in real time. Basically, it stops wasting energy.
So better battery life.
Better battery life, yeah, and potentially better performance, too. It's a high-margin area for them.
And this is ramping up now.
Yes, actively ramping with a major new handset customer. It pairs that customer's custom chip with Tower's envelope tracker tech.
And they expect more growth from this.
Definitely. They're qualifying more products and ramping up capacity specifically for this and their Albuquerque fab. Big potential there.
Okay, what about RFSOI? That's the mobile phone front-end module business.
Right. So 2024 was a strong year for them in RFSOI. Grew about 30%, way faster than the overall market, which was maybe 7%.
But 2025 is looking flatter for the market overall.
Yeah, the forecast for the RFSOI market this year is kind of flat, maybe minimal growth. So customers are burning through some inventory.
So that impacts Tower's RFSOI segment.
It does, but they made a key point. While the RFSOI front-end business sees that inventory effect, the growth from the new envelope tracker business, which is in the power segment, remember, more than compensates for it in terms of overall handset market exposure for Tower.
Ah, okay. So they still serve the growing handset market, just through different products this year.
Exactly. And for the specific RFSOI front-end business, they think Q1 was the bottom, the trough. They expect sequential growth through the rest of 2025 from that low point.
They did mention something about a customer shifting some volume to China.
They addressed that, yeah. Some volume for one large customer, older platforms mostly, is now being made domestically in China. They suggested it might be linked to discussions from a prior unrelated deals regulatory review.
But they don't see that changing the overall RFSOI recovery picture.
No, they reiterated they still expect growth from the Q1 low. And looking further out, they're actually forecasting a pretty significant snapback for RFSOI in 2026 and 2027.
A snapback? Driven by what?
Driven by newer customers ramping up where Towers gain share, plus engagements with big established customers starting new ramps later this year or early next.
Interesting. Okay. Machine vision sensors. Chips for cameras and robots, cars, that sort of thing.
Seeing a market rebound there, both 200 millimeters and 300 millimeters. And the sign of health is customers aren't just reordering old parts.
They're ordering for new designs.
Exactly. New sockets, things like traditional global shutter sensors and also 3D depth sensors using their speedy dipsettor for robotics, autofocus, that kind of stuff.
And when does that hit the revenue line?
They expect the impact from that rebound mostly in the second half of 2025.
Got it. Last segment they touched on was display. OLED backplanes.
Yeah, OLED silicon backplanes. They express confidence they'll get to high volume eventually. Activities are ongoing. Customers are forecasting.
They're not quite there yet on volume.
Not quite hitting high volume yet, but they're confident they'll reach their targets, which they said were a few thousand wafers per month.
Okay, so that's the segment outlook. How did all this translate into fab utilization in Q1?
Right, utilization. Fab 2, where they're building out SIDGE capacity, was around 55%. Fab 3 was higher, at 80%.
And Fab 5 for power.
Fab 5 was at 65%, reflecting that increased demand. Fab 7, their key 300 millimeter fab, was fully utilized, running flat out.
Okay. And Fab 9?
Fab 9 was at 70%. They specifically noted that Fabs 2 and 9 are the ones being actively repurposed for SIDGE and SIFO. So the capacity's there, waiting for customer qualifications to finish.
And they're also adding capacity elsewhere for SIFO.
Yeah, cross-qualifications and additions happening in their Newport Beach facility, too, to support the growth this year.
All this growth and repurposing requires money, obviously. Capital expenditures.
Big topic. They detailed several large investments, up to $300 million committed for the 12-inch New Mexico fab that's part of the partnership there.
How much paid so far?
About 15% paid. The rest, the other 85%, is expected by the end of 2026 as things ramp up. They expect production shipments and depreciation from New Mexico starting Q3 or Q4 this year, 2025.
And the Italy fab partnership.
That involves $500 million in cash allocated just for equipment for that 12-inch fab. They said 80% of that is already invested, the rest by the end of 25.
And specific money for the SIFO SIDGE expansion.
Yes, another $350 million investment earmarked for adding 8-inch capacity in Israel and Texas and 12-inch in Japan, specifically for SIFO and SIDGE. About 25% of that is paid, the rest by end of 2026.
That's a lot of investment.
It is, but they were clear that all of this is already baked into their long-term strategic and financial model. It's part of the plan they previously laid out.
Did they touch on external stuff like tariffs, policy shifts?
Briefly. Acknowledge the uncertainty it creates. But they feel their global manufacturing footprint and doing cross-qualifications across sites helps mitigate risks for customers, gives them flexibility.
Did they see any impact yet? Order pullbacks?
They mentioned a potential risk, like, say, Chinese power tools going into the U.S. could soften demand, but they explicitly said no order pullbacks seen yet related to these policy issues.
Okay. And one last point, there was some news about an India project.
Right, that came up in Q&A. They clarified that Tower actually asked to withdraw from that project months ago as their decision.
So the recent media reports weren't accurate?
They called the article baseless and inaccurate regarding the reasons for withdrawal. They didn't give the confidential reasons, obviously, but stressed Tower initiated the withdrawal, and there was never even a formal agreement to proceed.
Okay, good clarification. So pulling back to the big picture for investors, balance sheet strength.
They definitely emphasize that. Total assets hit $3.1 billion at the end of Q1.
How does that break down?
$1.3 billion in fixed assets and a hefty $1.7 billion in current assets, which gives them a current ratio of about 7x. Very solid.
And shareholders' equity
Reached a record high, $2.7 billion at the end of March. Plus, S&P Israel reaffirmed their ILA stable rating.
And they tied all this financial strength and the investments back to their long-term targets, didn't they?
They did. Once all the existing fabs, plus the new ones like Agrate in Italy and New Mexico, are fully loaded, those targets remain $2.7 billion in annual revenue.
$560 million in annual operating profit.
And $500 million in annual net profit. That's the long-term goal at full capacity.
And operating expenses expected to stay pretty steady.
Yeah, they guided for OpEx to remain relatively flat, around $40 million per quarter going forward.
Okay. We've covered the results, the outlook, the segments, the fabs, the investments.
Yeah.
Quite a bit there. So now it's time for that segment we call This Is Not Financial Advice.
And let's be absolutely crystal clear here. What we're about to discuss is purely illustrative. It's an idea based only on interpreting the earnings call information.
It is 100% not financial advice, not a recommendation to buy, sell, or do anything. Please, do your own research, talk to a qualified financial advisor.
Seriously, your money, your responsibility. Okay, disclaimer delivered.
With that firmly understood, here's a thought experiment, an outrageous but maybe plausible trade idea someone might construct after listening to that call.
Okay, lay it on us.
How about a long position in Tower Semiconductor, maybe using long-dated call options, thinking expiration way out, like into 2026, maybe even 2027?
Interesting. Long calls. What's the thesis behind that?
The core idea would be that the market is maybe underappreciating just how strong and sustained the growth from SIFO and SIDGE could be.
Right. Driven by that AI and data center demand, where they have that huge market share in a market potentially growing nearly 50% a year. High margin business, too.
Exactly. And you layer on top of that the ramp of the other high-margin business, the envelope tracker for handsets.
With that major new customer.
And then you add the company's own forecast for that snapback in the core RFSOI mobile business in 26 and 27, fueled by new customer wins and ramps.
Okay, so you've got multiple distinct growth engines potentially firing up.
Right. Their argument is that as these big capacity investments finally qualify and ramp production, particularly from the second half of this year into 2026, you could see an acceleration in both revenue and margins that perhaps isn't fully priced in right now.
And using long-dated calls gives you leveraged exposure to that potential upside, while maybe limiting the initial capital compared to buying stock outright, given semiconductor stocks can be volatile.
That would be the thinking behind structuring it that way. But let's say it one more time.
This is not financial advice. It's a hypothetical scenario based purely on the call commentary. Do your own work.
Absolutely. Okay, so just to wrap up the key takeaways from this Tower Semiconductor call deep dive. Q1 was solid, met expectations.
Q2 guidance points to sequential improvement. And that core idea, the H2 acceleration driven by capacity ramps, that thesis is still very much intact, according to the company.
And multiple segments look strong. RF infra with SIFO SIDGE, power with the envelope tracker, even sensors showing a rebound.
Yeah, lots of moving parts, mostly pointing positive based on their outlook.
And remember, everything we discussed today came directly from the Information Tower Semiconductor provided in their Q1 2025 earnings call transcript.
And as always, this is just for your information. It's not financial advice, not a recommendation to buy or sell anything.
We hope this deep dive helped you cut through the noise. If you have any feedback or ideas for other calls you'd like us to tackle, do let us know.
Thanks for tuning in to Talk Tickers.